If you're thinking about investing in stocks, now's the time. The market just crashed and everything's on sale right now. So a lot of friends have been asking me how they can take advantage of the market the way it is, but they don't know where to start. So I decided to make this video to simplify the process for them and for you and anyone else watching. And unlike other videos on this topic where they give you a bunch of fluff to raise their YouTube watch time and they leave you with a lot more questions than answers, I'm gonna get right into the meat and potatoes and simplify everything. I'm gonna be showing you step by step the easiest platform to use, the best stocks to buy if you're a beginner, and the simplest strategy that anyone can use to grow their portfolio. This is going to be the absolute easiest way to get started with stock market investing. Even if you're sitting on the toilet watching this right now, you'll be able to get started without even having to wipe first. So stay tuned. Okay, so the first thing you need to do is open a brokerage account. A brokerage account is basically the platform that you'll be able to buy and sell stocks. You do need to be 18 and over to open a brokerage account, so if you're not 18 and over, have your parent or guardian or somebody do it, and then when you turn 18, you can transfer everything to your own account. And if your parents suck and don't want to help you take control of your financial life, see if a sibling or somebody will help you. Basically anyone that's over 18 can open an account. I just want to get that out of the way because I know there's always somebody in the comments asking if they can invest in stocks if they're under 18. Now, as far as the best platform to trade, I'm just going to go ahead and say it. Robinhood is definitely the easiest platform to use, and I highly recommend them. Now, I have multiple accounts with different firms for different reasons. I have a Webull account, an E-Trade account. I used to have a Merrill Lynch account in the past. But as far as easiness for a beginner, you definitely got to go with Robinhood. To me, it's like the Apple iPhone of brokerage accounts. Robinhood's even got the easiest sign-up process. You can do it right from your phone. Webull has a pretty easy sign-up process too, but sometimes some of these bigger ones like E-Trade or Merrill Lynch require you to sign some paperwork and send it over to them. And since I'm making this video as the easiest way to get started investing in stocks, I want you to be able to do everything that I'm going to show you here right from your toilet. Because basically, if you can't do something from your toilet, is it even worth your time? Now, there's different benefits from all these brokerages. That's why I have all three. Like Webull gives you awesome analytics right on their app. E-Trade allows you to trade more than just stocks and allows you to trade all these other different kinds of securities. So I use them all for different reasons, but as a beginner, Robinhood's where it's at. If you're just getting started, all those analytics on Webull might actually just serve to confuse you. It's not as easy to just point and click something to buy. You can literally buy a stock on Robinhood with 2 clicks. Their dashboard is super intuitive and very easy to understand. So another cool thing about Robinhood is if you use a referral link to sign up, you and the person that referred you can each get a free stock that's valued up to $500. Now, I've never gotten any stocks that's worth more than $15 there, but I've seen people in comments and stuff like that mention they've gotten things like Facebook and Apple that both those stocks are worth over $150. So if you have a friend that already has Robinhood, you can hit them up and ask them to send you your referral link so you guys both get the free stock. If not, you can just use my referral link below. That way we both get a free stock and it's like we have a connection. But not like that. No homo. It's like a financial connection. And I'll also add my referral link to Webull as well in the description, because if you don't have a Webull account yet, you can actually get 2 free stocks that are supposed to be valued up to $1,200 each. So I'm going to pull out my phone and we're going to go into my brokerage accounts now, and I'm going to show you exactly why I like Robinhood more than Webull or E-Trade. Like I said, I have all three, but how simple Robinhood is just keeps me coming back to their app time and time again. Okay, so we're on my phone. This is Webull over here. And it's got a pretty cool interface. It's really clean. Shows the markets here. The thing that I don't really like too much about it is when you go into, let's say, analyze a stock, it's just a lot of information, which is cool if you want to analyze stocks, but if you just want to buy something and keep things simple, it just complicates things. Even when you do go to buy something, it's not the fastest, most intuitive thing in the world. There's a lot of things going on. I mean, it's not hard, but Robinhood just makes it so much easier. Webull I would definitely put as like a close number 2. If there wasn't any Robinhood, I would use Webull most likely. Now let's go into E-Trade and I'll show you. Now I'm in here, I have a good 3 cents in there. And similarly, it's got a lot of the same features. It's got watch lists. See, trading isn't that easy. With Robinhood, you can literally just click two buttons and you'll be able to trade. You have the markets. It's something else. It's not as clean and pretty. It's still clean, but it's not as pretty and easy to use as Webull, but it's also a good alternative if you want to buy different kinds of securities and things like that. Now let's go into Robinhood. Now Robinhood, as you can see, the first thing you see is a clear dashboard with big numbers, and you know exactly what's going on. This is how much your portfolio grew over the last day, over the last week, over the last month, over the last 3 months, and over the last year, and also all time. Now under there you'll see the cash balance. I'm mostly cash right now because I'm a pretty active trader, and I noticed that we might have been going towards a crash because of everything that's going on. So I sold most of my stocks before that, so now I'm mostly cash. You get some quick news about stocks that you own and or are watching right here. And then it shows your top stocks. Then it shows cryptocurrencies too, but I only own cryptocurrency because I'm kind of a degenerate gambler. I don't recommend you buy any cryptocurrency if you're a beginner. And then here's your watch lists. And here's your wallet with how much cash you have, and this is where you can transfer money into Robinhood or transfer money outside of Robinhood. Messages is just kind of like news, and you can also ask them stuff here. And then this is where you search, where you can browse companies, right? And they also have some news. So let's go look for a company, and I'll show you how to buy a stock. Let's type in Amazon. Amazon's a pretty well-known company, and right here it shows how the stocks have been going: 1 day, 1 month, 3 months, 1 year, 5 years. One thing I do wish they had, I wish they showed longer than 5 years, like maybe from the stock's inception, which would help you make better decisions, but they don't, and it's fine. Some quick stats, some quick news about the stock, some analyst ratings. Be careful with analyst ratings. Just because a couple of analysts are saying buy doesn't mean that the stock is good. Be very careful with that. Don't buy stocks just because a couple of analysts said it's a good thing. This research report, you might not be able to see it on yours. This is because I pay $5 a month for the gold membership that they have. Their earnings, history, and about the company. And let me show you here how easy it is to just go ahead and buy a stock. You basically just click buy, put in the number of shares. Let me do 5 shares, review, swipe up to submit. And that's it. I add an order. Right now it's the weekend, so the stock market's only open from 9:30 a.m. to 4 p.m. on weekdays. So now it just shows the order. I can click done, or I can click view order, and I can cancel the order if I don't want to do it again after. So you're not like bought in unless it's during market hours. If it's during market hours, it'll execute the trade right away and you'll buy it if you do it that way. There's a couple of other ways to buy as well. You can come here and change the to a limit order or something like that, but since this is just a video for beginners, I'm not going to go in through that. Maybe I'll make another video later on how to use each one of these orders, but right now I don't think it's necessary. Okay, so now that you know how to buy the stocks and what platform to use, let's talk about which stocks you should actually buy as a beginner. So in my opinion and many other people's opinions, the best stocks you should buy if you're a beginner, a novice, and you don't know much isn't actually stocks at all. It's ETFs. So what's an ETF? An ETF is an exchange traded fund, which is basically an index fund that you can buy like a stock in places like Robinhood and things like that. Now, when you buy a stock, you're buying a piece, a share of a single company. An index fund, when you buy an index fund, you're buying a piece or share of a group of companies. Now, the benefits of buying an index fund over buying stocks is less risk because you're diversified. With just buying one share of an index fund, you're diversified between a ton of companies, sometimes hundreds of companies, sometimes even thousands of companies. So if you buy one stock of a company and that company fails, you're screwed. But if you buy an index fund and one of the companies in the index funds fails, you still have all the other companies over there that didn't fail, and it won't bring down the index fund price by too much. The next benefit is it just takes no time and effort. With individual stocks, you have to do a lot of research to pick the right stocks, check how the company is going, research the best time to come in, understand finance, understand how the company works. With index funds, it's basically a passive strategy. You don't need to know too much about the companies. I would just pick an index fund that has companies that you actually like, maybe some companies that you actually use as well. For 99% of investors out there, they actually make more money in the long run by investing in index funds instead of selecting stocks. In fact, there's a study that shows that over 90% of portfolio managers actually lose to the index funds over a 15-year period. And these portfolio managers, they're not your average investor. These portfolio managers are some of the smartest people in the world when it comes to finance and stocks and the stock market. They're typically Ivy League graduates, and still only 1 out of 10 of them can beat index funds over a 15-year period. Even Warren Buffett, who's widely regarded as the best stock investor of all time, recommends index funds for the average investor. So let's go back into my phone now, and I'm gonna show you which ETFs I like and why. So I have a list down here of my favorite ETFs. So each of these ETFs have different companies in their basket of companies. So you're gonna wanna look them up and check out which companies they are so you can see if you like the companies or not. Don't just take my advice on it. So this VTI, it's probably my least favorite one. And this is the total stock market ETF. It basically is a collection of every company available. And over the last 5 years, it's gone up 15%. We've had this crash, as you can see. Before the crash, it was up 56%, which is over 10% a year, which is pretty decent. Now, VOO, that's the Vanguard S&P 500 ETF. It even pays 2.27% dividend per year. Dividends are basically profits that the companies pay out to their investors. So VOOG, it's basically the S&P 500, but it's more weighted towards growth stocks, companies that are really pushing heavy to grow as fast as possible. In the last 5 years, they've gone up by 40%. Before this crash, they were actually up by 80%, which is pretty wild. That's about 8% per year right now, and before the crash it was up 16% per year. VONG is the Vanguard Russell 1000 Growth ETF. So this is another index. Over the last 5 years, it's gone up 46%. This is one of the ones I like. The dividend yield's not as high though. But my favorite ETF is this QQQ, the PowerShares QQQ. It's basically the NASDAQ 100 stocks, and the reason I like it the most is because there's a lot of technology in there, and technology is growing super fast. So over the last 5 years, they've actually grown by 70%. And before the crash, they were up by 116%. If you want to see which companies in each of these, you could just go to Google. ETFchannel.com is a good website for it. But as you can see, VOOG is basically the S&P 500, and they put a lot more weight into these growth stocks like Microsoft, Apple, Amazon, Facebook. Those are all really big growth stocks. They even tell you on the right how much money is in each of these. So whatever ETF you choose to buy, do a quick research to see if you agree with the companies, if you like the companies, if you use them or whatever. Like I said, my favorite one is QQQ, just because I'm really into technology and I like to see things grow, but I do diversify. I'm a pretty active investor, so I do a lot of my own stock picking, but as a beginner, just pick one of these ETFs and just put money into that. So next, let's talk about the main strategy that I recommend for beginners. To me, this is the simplest strategy that yields the most results, and you're guaranteed to become a millionaire if you follow it from a young age. And no, I'm not exaggerating. This is the kind of thing that should be taught in school. The younger you start, the better, and if you start young enough, you're literally guaranteed to become a millionaire eventually with this strategy. And the easiest part about it is with technology these days, you can easily automate this strategy, so you can set it and forget it, and just wake up with a ton of money in your bank account. So the first principle of the strategy, and this is the key, is you have to be able to pay yourself first. So when you get a paycheck, you typically use it to pay your rent, pay your car bill, pay your cell phone bill, and then you use the rest of the money to go out with friends or hang out or do anything. And maybe if at the end of the month there's a little bit left, that goes to savings. And sometimes even if you are able to save things from the previous month, the next month, if anything extra comes up, your savings are typically gone because you don't separate things. So one thing you need to start ASAP is paying yourself first. And the way that works is you need to prioritize you and investing for your future as the number one thing above everything else. How much you want to save and pay yourself first with is entirely up to you. Everybody's different. I suggest starting with at least 10%. If you can't do 10%, then just start with 1%. You need to at least start building this habit, and eventually you can ramp it up. So the good thing about paying yourself first these days is we have technology, so we can set up automatic deposits from our bank account to Robinhood as soon as you get paid. So let's hop back into Robinhood and I'll show you exactly how you can do that. If you go to the wallet tab, you can click transfer, then click schedule automatic deposit, set up automatic deposit, and what I would do is pick whenever you get paid. So if it's weekly, twice monthly, monthly, let's do twice monthly, and then click set schedule. And it says right there the deposit will be initiated on the 1st and 15th of every month. So if you get paid twice a month, this is a good schedule, but you can set it however you want. Put in the amount of money, whatever it is that you can save twice a month, add it in here. Click review and submit. And done. And that's it. So literally now every 2 weeks on the 1st and 15th, you're automatically going to deposit $200 here. And this is basically the principle of paying yourself first. You're going to do this without thinking about it. And then when you look at your checking account, you're not going to have money to go spend on that extra whatever that you want to do. Even if you don't want to buy ETFs, this is a great strategy regardless. Paying yourself first allows you to really build up for your future. And the next principle is to buy and hold. So whatever you get, just buy it and just hold it. The stock market will be up and down, but if you hold for the long term, it'll eventually even itself out. And like I said, index funds usually beat individual stock picking over the long term by far. Now, tons of studies have showed that it's basically impossible to try to time the market, and if you try, you might actually lose a lot of money. So just keep buying more and more stocks whenever you do a direct deposit, whenever more money comes in. If you have any kind of lump sum, put a little bit of that in there too, and just keep buying, holding, buying, and don't try to time it too much. Now, if you're watching this when this came out, you're in luck because everything's really down right now. It's a really good time in the market to get started. If you make a solid plan, just buy a little bit over time. It actually lowers your risk of putting too much of a lump sum during a really bad time and losing money. And history has really shown over the long term, the market just trends up. So whatever you buy, just plan on keeping it there for at least 5 to 15 years and just let compound interest do its magic. So that leads me to principle number 3, which is compound interest. Compound interest is basically the addition of interest into the principal sum. In other words, it's interest on interest. So whenever you make interest on your original amount there, if you don't take it out, it just builds up more interest and it builds up into a snowball effect, and eventually your money's gonna grow to a massive amount. And let me show you how that works. I'm gonna pull out a compound interest calculator so you can have an understanding on the effect that compound interest will have on your money over time. So check this out. If you wanna use it yourself, you can just go and Google compound interest calculator, and it's the one that's in investor.gov. So add your initial investment. Let's say you're just starting out and you have, even if you have less, I'm just gonna put $1,000 as your initial investment, and you plan to contribute, let's say, $100 a month. So if you're gonna do $100 a month, which isn't a lot, and length in time in years, say you're like 20 and you're gonna hold it for 40 years. So this is gonna be a retirement fund. And let's estimate the interest rate at an average of 8% because the market has historically done about 10% a year, and then we're gonna calculate 2% for inflation. Let's not worry about interest rate variance range. Compound frequency annually, that's fine. Let's click calculate. And by adding those small amounts in and staying consistent, in 40 years, you're gonna have over $1.2 million. So you're guaranteed, if you start early and do this religiously, to be a millionaire. You're literally guaranteed to be a millionaire. And as you can see in this chart, the green part is the money you put in, and because of compound interest, you see it just gets exponentially bigger over time. So the sooner you start, the better. So hopefully you get something out of this. I really wanted to make this a quick video and really give you the meat and potatoes of how to get started. So if you watch this from the toilet, go ahead and wipe now. If you enjoy this kind of content, like and subscribe. Leave me a comment. Let me know that if you want to see more things like this. If you have any questions about anything I talked about today, go ahead and leave me a comment. I'm going to try to answer as many as possible. But that's it for today. So until next time.